In 2019, stock trading became free. Now, it was literally almost free before 2019, but in 2019, it became free to trade as much as you wanted, and you really didn't have to pay any commissions. And that changed a lot of behavior. And we have to talk about that behavior today because there's something going on in the stock market that is continuing to play itself out. And I think really people are missing this whole point. And here's the great thing. I'm going to do it in a way that I haven't done it before. I'm going to look at a type of price chart that I've probably done it in the past, but I don't do it very often. So I want to talk about what's going on with the markets today and how I think everyone, maybe not everyone, but a lot of people might be getting it wrong. Stick around, I'll cover that and so much more. Hey everybody, this is RC Peck, and this is my weekly update where I'm always looking at price charts. I get up in the morning, that's the first thing I do. It's been a passion of mine since I've been in my late teens, read 30 plus years ago. And so when you look at price charts, when you look at hundreds of thousands of price charts over time, maybe even millions, you start to just notice things other people don't notice, right? It's almost like saying, you've practiced the violin 100,000 hours longer than someone else. Like there's nothing magical about it. You just have put the time in. And so I want to talk about what's going on in the market that I don't think people are covering. I'm going to cover what's going on with this whole recession, not recession thing. I want to look at price charts in a way that aren't typically looked at. So we're going to jump into this. And I really think it's going to help everyone, whether you're 50, 80, 32, a lot of these videos are not only to talk about what's going on now, but also to help you think smarter and act smarter. Okay, let's pop over to the price chart. So here's the first thing I want to do. I just want to look at price charts on what's called a monthly basis. So each one of those are called candlesticks, what you're looking at. Each one of those represents 1 month of price history. The time range of this price chart is 6.5 years. So this is the stock market today. And the thing I want to point out is nothing really much has happened. I mean, clearly you can see that those candlesticks have fallen. But there's nothing too crazy about the movement. And the way you would think the world is going on and happening is that it's ending or it's not ending. It's ending today. No, it's not ending today. And I simply want to kind of point out that nothing's really happened yet. Now, I follow a system that rebalances people out of the market if the market starts trending down. So I'm not saying steps haven't been taken. What I'm pointing out is when you look at the price chart at this time length, 6.5 years, and start looking at monthly data points, it's kind of like, not much has really happened yet. And yet the way you would be reading the Twitter sphere or Instagram or whatever socials you're looking at or headlines, you would have thought the world ended and then it didn't end. Now, I want to show you this. This is the S&P 500. Look at this price chart right here. This is, let me put in the S&P too. This is the S&P back in 2008, right? So we have 05, 06, 07, and the beginning of 08. And to me, if you look at October, if you look at 2007, by the way, no one had any idea what was going to happen in 08, in 2007. But you have what's looking like something a little more scary, but then it just corrects. Now, why I have this, I literally am showing you 8 months, 8 candlesticks, just like I showed you in current. Like, let me go back to the current one. I want to just show you this right here. So there's 8 candlesticks since it stopped falling. These are 8. Since the market stopped going up, there's 8 of them. Back here in 2007, right here, we're looking at, I think I have it right, 1, 2, 3, 4, 5, 6, 7. We could put one more in here. 8. Actually, let me keep that because I don't want to show that yet. So let's just look at 8 from the top. It's, again, there's not much going on there. Now, I can go, we're only looking at 3 years, 3.5 years of data, but still, no one was talking about market crashes in 07. By the way, there was no iPhone really. I mean, iPhone came out in 2007, but 7 people had it in San Francisco. And then you go back to 2000 and we look at 2000 here. And this was the high candlestick here. Actually, the high of the year for the S&P happened in March, right along with the NASDAQ. And including that, those 8 candlesticks, you don't see anything. Like nothing has really happened. Now, if we look at the NASDAQ, actually, let's look at NDX 100 because that gives us enough data. You can see like something's going on, but still not a lot when you look at the previous 4 years coming into it. And this is the point I'm wanting to make. Like nothing's really happened yet, right? If you're looking at the NASDAQ, it fell 33%, but now it's back only down 25%. Same thing with the S&P in those same relative terms, but nothing's really happened yet. But I believe because people are so used to expecting like things to go up 50% or down 50%, right? The whole Bitcoin thing or the trading after the global financial crisis, we have this belief that everything happens immediately and then it's done. It's been 8 months, whatever's happened, it's done. And now we're going to go right back up. I have no idea what's going to happen next month. One of the points I want to make is you can just look at what's happening now. So we know what's happening now. I started this video off with showing you the SPY, the S&P 500 with dividends reinvest. This is what's happening now. I don't know what's going to happen for the next 8 months. And we didn't know what was going to happen for the next 8 months in 2008. Well, here's 2007, the peak of '07. We didn't know what was going to happen. Same thing going back to 2000. Let me just go back to S&P. That's the point I just want to make. We're attempting to make these huge parallels, like it's going to crash some more, it's going to go up some more. Why am I talking about this? Because the recession word is out. Are we in recession? Did we have a recession? Did we not have a recession? We had 2 negative growth. My brain. We had 2 quarters of negative growth. So historically, that is a recession. Now, in 1947, we had 2 quarters at the end of 47 of also negative quarterly growth. I think everyone's completely missing the picture here. The economy is slowing down. It's not speeding up. Whether is when we're in recession, we have 2 quarters with negative growth. Maybe this next quarter it's positive and the quarter after that it's negative. The economy is slowing down. This is after whatever trillions of dollars the Fed printed and whatever trillions of dollars the US government went into debt, okay, deficit spending. That's just the US. I think what's not being talked about is things are slowing down. It's okay if they're slowing down. They're not speeding up. Now, here's the problem. The economy is slowing down while inflation is speeding up. Are we going to have 9% inflation next month? No. But even when it settles down probably to 5 or 6%, a 1% growth economy in a 5 or 6% inflationary world, that doesn't seem healthy. And we don't really have a name for what's going on right now. We could say stagflation, and sometimes I say that. That's where inflation's high, growth is low, and unemployment is high. We don't have high unemployment. We have high employment. So we're literally in a situation now where we have like the best employment numbers ever, almost ever. I'm sure there's 1 month back in some, decade that was a little bit better, but having unemployment at 3.6% basically means everyone has a job who wants a job. So we have great employment, we have a slowing economy, and we have inflation. That doesn't have a name. And everyone's fixated on a name and trying to figure out right now, what do we have to do? What do we have to do? And so I go back to these price charts. And so the thing I really want us to kind of remember most is get rid of the words. Let's just look at what's happening right now. And that's something Howard Marks, if you know that name. If you don't, go YouTube Howard Marks. That's one thing he has talked about a lot. He goes, I have no idea what's going to happen. I don't make predictions. I don't do forecasts. He goes, what I do is I look at what's happening now. And he goes, I don't find many people do that. Many people do not do that. There's something I just want to show. And I want to show this as I kind of wrap things up here. Let's see if I can squeeze it out. One thing I want to show, and some people aren't going to like this, and some people will like it. If you don't like it, that's not the point whether you like it or not. I want to show this. It's a U.S. government official. I'm sure all of you can kind of figure out who the woman is in the pink. What I love about this is there's a really, really big, powerful country in China that is telling the world, please ignore Taiwan. Taiwan doesn't exist. And everyone's complying. Everyone's like, oh, China. We can't get mad at China, or China can't get mad at us. We got to stay away. And they want to take over Taiwan, that island of 23 million people. Look, as some of you know, I was an Asian studies major. I lived in Asia in my 20s. I know a lot about Southeast Asia and China and Taiwan and that whole thing that's going on since 1949 when Chiang Kai-shek kind of stole all the jewels from China and took them over to this island. What I like is here's this person who's a woman who's like, you know what? I've been supporting Taiwan. Taiwan is a country. It is an independent country. And it's things like this, and this is not a Democrat or Republican, but it's things like this that actually make me feel proud to be a U.S. passport holder, is like standing up for what's right. I think standing up for a smaller country like Taiwan is probably a good thing. And no country in the world except the U.S. is standing up for Taiwan. By the way, the U.S. has stood up for Ukraine more than any other country, I believe, and has given more funding. I'm simply bringing this up because there's a lot that's being, for good reasons, have been putting down on the U.S. and what we've done wrong. And we've done a lot of things wrong over the last, 5 or 10 years. But this is a good thing, and it does make me feel proud. Like, yes, the U.S. still has a lot of good things going for it, and this is one of them. And whether you like Madame Speaker or not, standing up for smaller countries, standing up for other people is really the way, and it tells us a lot about countries and who we are. Okay, let's land this plane. Let's kind of put it all together. So we've been kind of taught over time that everything has to happen really fast. The market's got to fall quickly and then go back up and everything's done. And Bitcoin goes up 200% and drops 50% and then goes up 200%. That's actually not how the world works. There's a lot of digesting that is going on. If the stock market has peaked, it can take many, many quarters to do that. Topping and bottoming takes time. And no one's really talking about that. And I think we've all been hijacked by this whole recession or no recession, right? It kind of has us looking over the part that we don't really need to look at. It doesn't matter what it's called. What we have is a slowing economy. So I don't think anyone would debate that. That's number one. Two, we have inflation that we haven't seen since the late 70s, early 80s. No one would debate that. We have incredibly low unemployment. No one would debate that. And we're in a time that we haven't seen before, right? The amount of trillions of dollars that got printed for COVID. And look, maybe if we didn't print, the Fed didn't print those trillions of dollars, maybe we would have gone into some deep, deep depression. We didn't. But maybe 9% inflation and historic low unemployment and a slowing economy is the result of it. And maybe that takes a couple of years to get through. So, and I know this is running a little long, but just be careful whether we're in a depression or a recession or a panic. By the way, those are the three names of what we were in. It used to be called a panic. And then the White House, the government didn't like the word panic, so they changed it to depression. And then in the early 70s, the government, the White House, didn't like the word depression, and it changed to recession. Maybe it was in the late 70s. And now the White House doesn't like the word recession. Get over the words, look at the price charts. Thanks, everyone. I know I went a little long today. I had a lot on my mind just about how we can easily get hijacked, and I don't want you to get hijacked, but to really understand what is going on in the market today, not what's going to happen or what did happen, but what's happening today. Okay, if you like this, please like it, show it to a friend, leave a comment, and I will see you on the next video. Okay, bye.